Hello and welcome to a Smaulgld special report on gold. Is the price of gold following a pre-vertical pattern? I got some charts from Nick Laird over at Gold Charts or Us that I want to share with you. One of the things that gold bugs do is they capture a piece of news or they latch onto it and then they declare game over, as if that piece of news, as stunning as it may be, indicates that the price is about to skyrocket, go to the moon, and it's game over. We're going to see these charts and things, these types of perceived cataclysmic events often do result in higher gold and silver prices. However, they generally take a lot longer than you might imagine. Or if you look at history, you'd realize they don't happen overnight. Things like Brexit. Yeah, you get a pop in the gold price, but it doesn't hold. So let's take a look at these charts that Nick Laird showed us, and we'll see if we're following this pre-vertical pattern. Let's give you some background of the gold bull market in 1971 to 1980. Now, the devastating impact of Richard Nixon taking the United States off the gold standard should have sent gold to $1,000 immediately, but it didn't. In August of 1971, Richard Nixon went on TV without warning and unilaterally ripped up the Bretton Woods Agreement that had a Bretton Woods agreements which had provided that central banks that were signatories to this agreement since 1944 could bring their dollars to the United States in exchange for gold. And Nixon said, not anymore, you can't. Well, that meant that the dollar was no longer as good as gold. And as a result of that move, and then following that move, you had increased deficit spending. You had the increase in the Vietnam War still going on. There was a series of oil embargoes, which ratcheted up the price of gasoline in the United States. You had political turmoil. Nixon himself got involved in Watergate and had to resign. You had geopolitical tensions. You had the Cold War still going on. You had Iran taking hostages, United States citizens hostage out of the U.S. Embassy. You had Jimmy Carter trying to rescue them and failing. And inflation is raging during this time period, and the price of gold soared. But it didn't soar in 1971 or 1972 or 1973. It went up, and you could see the cumulative effects. And in 1974, U.S. citizens were allowed at the end of the year to start buying gold, to legally own it after Roosevelt confiscated it in 1933 and banned private ownership. But you could see gold was in the $33, $34 range. You know, it hit $50, $60, and it did move up. And it moved up well over $300. And during this time period from 1970 to 1976, it made a nice move. But, and it's a very nice move, and it's over $100. But remember, gold went to $800 in 1980. Well, let's see how that happened. Before we do that, let's look at the current chart that Nick Laird provided for us. He's showing a gold price between 2000 and 2017, and it shows a similar pattern between corresponding to the 1970s. So here's the 1970s. You can see that's only a 7-year period, 1970 to 1977, and then he takes 2000, and you can see from 2000 to 2017, it's very similar. If you go to the Smaulgld website, you can look at these charts at your leisure. I'll put a link below and you can analyze these charts. Again, nice move. Now remember, even though gold went up to $1,900, the percentage increase, it was from 300 to 1900. Similarly, you went from 300 to about $150. So they're about the same. I haven't calculated the increases, but you can't use the $800 price that it eventually went to, because that's all inflation adjustment, comparing that to the $1,900. So the way we look at these charts is that the next high, if it follows these trend lines, is not $1,900. It's something far higher, maybe $5,000. I'm not predicting it. I'm just saying let's take a look at this thesis in the gold trend lines, that if you take the analogy that we're right now at the same point as we were in 1977 here in 2017, then we're due for a vertical price spike. Now, what would make that happen? Well, the analogous event, the cataclysmic event of Nixon abandoning the gold standard in 1971, I would say, was 2009's Federal Reserve's institution of quantitative easing in the series of, in a sense, devaluations of the dollar. Forget what the dollar index did. The amount of printing that went on out of thin air was of the order of $4.5 trillion. You had the interest rates brought down extremely low. Did the gold price rise as a result of those efforts? Yes, it did. You can see that while the price was rising all through the 2000s, it really spiked when QE came into being here in 2009. From here to here is a much bigger move. We moved from the $600–700 range all the way up to $1,900, and then here we are now around $1,250. So we did not immediately go to $5,000, but the price of gold went higher. So I think for a replay of that 1979-1980 vertical gold price, we'd probably have to see another bout of low growth, which we've already had. We've had that for years. You'd have to have a replay of the low rates for too long, which we have. Maybe Trump keeps yelling. Maybe that's what happens. Yellen's not going to keep raising rates. You know, maybe Trump, if he doesn't reappoint Yellen, reappoints another dove. He said the other day he likes these low interest rates. Well, then you get higher inflation due to a lower dollar. You get, he puts tariffs on goods that adds to the inflation. You have political turmoil, which is always a possibility, and Trump screws up big time somehow. Well, now you have the same kind of recipe in the stagflation, the same recipe as you had in the 1970s. It's all possible. Will it lead to a vertical move in gold? I don't know. But one of the things that I would do, I like Nick's chart here, but I would like to start it from 2009 because that was the big event, I think. There was no real event happening. There was deficit spending during this time period. Supposedly there was a balanced budget in early 2000. But the real issue came where I think the defining event where the U.S. went overboard, just like when Nixon went overboard in 1971, coming off the gold standard, was the institution of QE in 2009. And maybe it takes 10 years, 2018, 2019, for it really all to work its way through the system and result in a higher gold price. Now, let's see what happened now in 1979. So remember, if we're looking here, we got this nice kind of move up, and then boom, you go from $220 an ounce in January of 1979 all the way up to $560. Now, that's a huge move. And that is like what you might have expected when Nixon went off the gold standard. Although back then they had the price set at $33. There wasn't so much of a free market in gold. But there was a free market in gold in the 70s, and the price didn't spike like it did in 1979. And then in 1980, it went straight vertical. It went from 560 for the end of 1979 all the way up to 800, and then it came back down. But look at the aftermath. There's 1981. The price, after it gets clobbered, goes all the way down, gets cut in half to 410. And then for the next 10 years, basically, if you start from 1981, it flatlines between $300 and $400 an ounce. So generally after these vertical moves, you get a period of flatlining of after the bubble bursts. If you're interested more in how it might impact silver, you could check out the price of silver in 1979 and 1980 versus 2013, 2014, which goes through some of the analogies over the two time periods. Thanks for listening.